Well, markets have been rattled this week by tariff fears, surging silver, and Tesla's troubles. From trade tensions to shifting demand for key metals, the US and Canadian markets have reacted sharply. We've seen major moves in copper, gold, and silver. Well, to unpack it all, we're joined now by veteran market analyst and portfolio manager John Ing. John, thanks very much indeed for talking to us.
Good to be here.
Well, markets slid this week as global trade tensions grew, John. How are these worries weighing on Canadian mining stocks and investor confidence? What are you reading?
Well, in the upcoming quarter, we're going to see some terrific results among the gold companies. Margins are wider, the gold price is higher. In Canadian dollars, a lot of the mining companies are going to report record profits. So that's the good news. The bad news is that the volatility in the market, it goes from week to week, whether the tariffs are on or off, and that affects the stock market. Yesterday, we got the good news that Trump had done a deal with Japan, and it was sort of like, I call him Muhammad Ali, used to lead with his left and jab with his right. Well, Mr. Trump leads with his left and promises higher double digits tariffs, and in fact, Japan got less, a 15%. But even at 15%, which seems to be the base tariffs for everybody, that is something like 7 times what was last year, and it's the highest ever since the Great Depression. So while the market is signed a relief, the reality is that these tariffs are very bad for businesses, for consumers, but not for Mr. Trump.
Yeah, and in the midst of all of those events, John, silver hitting a 14-year high this week. Really, what's driving this rally, and how do you think, do you think, first of all, it has staying power?
Well, the silver price, and like a lot of the commodities, we have to think back that this is a different economy. It's almost, Devin, like a wartime economy. And now with the United States isolating themselves from everybody, the reality is that, for example, you take copper, where there's a potential tariffs on copper, there's realization by a lot of economies, central banks, that we are vulnerable. And thus there is a belief to looking at supply chains, looking at stockpiling, looking at sovereignty as far as with respect to mines. And so when you have silver, there's a trial balloon floated in the United States that maybe they should go back to creating a stockpile. The last time the Americans created a stockpile, it was like 3 billion ounces of silver. Silver only production in the world is only about 820 odd million ounces. So that's a lot of silver if they wanted to stockpile. That the dollars are not there, that's something else. But nonetheless, this wartime economy has everybody looking at commodities and thinking, well, these are expensive to mine, but if there's tariffs or if there's other things slapped on it, it's going to be fairly interesting price-wise. So that's the reason why you're getting the volatility in these metals.
Yeah, it's interesting you mentioned copper, John. Copper saw 2 big developments, right? You had Chile raising its price forecast, and then Teck extended the life of its British Columbia mine. What do these mean for copper's outlook, you think?
Well, I think that the other point for copper is if this AI turns into fruition, the reality is that we're going to need these data centers. There's going to be the need for consumption of a lot of electricity, a lot of power. Copper is used in that infrastructure. So there's not enough copper in the world today to provide what is believed to be the AI infrastructure. So when you look at Teck, Highland Valley has been going on for a long time. So a couple $1 billion expansion, they extend the life from 2028 to 2040, I believe. It's the largest copper mine. There's no question that the return is there given current copper prices. So it's a no-brainer. Teck has its exceptional results from copper and is offsets some of the problems that they have at Quebrada Blanca.
Yeah. So while we're at it, I mean, we've spoken about copper, silver. Just give me your take on gold climbing to a 1-month high this week. I mean, is this a sign of broader risk-off sentiment, or is this just a short-term move? What's your take?
Well, I've been saying that for some time that the best Trump trade is gold. Now, there's two aspects at this right now. Is one is the U.S. dollar continues to sink. The technically there is a possibility that the U.S. dollar could trade below what is literally a 14-year uptrend. If that is the case, it can go from the trade weighted indexes at sort of 97 could go down to 90. That would be catastrophic for U.S. investments, I might add. But that's what's happening in the technical market. So you combine that with the aspect of the uncertainties, again, with tariff. The United States' two biggest trade partners are Mexico and Canada, and we have yet to see any sort of trade agreement. And what is that trade agreement? 15% tariffs, 25% tariffs? We don't know. And this affects not only Canada, but America also. We are seeing some tentative numbers that, in fact, these tariffs, notwithstanding what is said by the Trump administration, that they're beginning to hurt. General Motors reported $1 billion loss and expects the cost of tariffs to be $4 to $5 billion this year. We've seen now some Walmart increase their prices, so we're beginning to see now. It's been early days because a lot of companies have been running down inventories that they had stockpiled 90 days ago, and this is what's happening in the markets. The markets said, "Oh well, there's not a major impact," but we're beginning to see that impact, and so my guess is the next quarter is going to be a very critical quarter for the markets.
Yep, now it's going to be an interesting space to watch. But before I let you go, John, got to ask you, Tesla shares tumbling after poor results and fading electric vehicle sales. Could this cool investor appetite for battery metals like lithium and nickel? What's your take on that Tesla performance?
Well, Devin, the largest producer of electric cars, autonomous cars, are not Tesla. It's China. BYDs, they need a lot of lithium. They need a lot of nickel. And they are the price generators, the price determinants of markets. And there's no secret that when we in North America and others were coming up with lithium deposits and that we drove the market to sky-high prices. The Chinese, who are the big consumer and also processor, said, this is ridiculous. They literally brought the price down to where their cars, et cetera, that where they have overcapacity can run. So Tesla results in the last quarter, a lot of it, interesting enough, was not from the sale of cars, was from the credits from the Green Bill. That's been dashed with Mr. Trump's one beautiful bill. And so that will hurt Tesla. Tesla's got a lot of competition. In Europe, we might see Chinese cars. We won't see that in North America, but the Chinese continue to build very good electric cars, vehicles, and continue to consume the lithium, the nickel of the world.
Well, very interesting indeed. And thanks very much indeed for your insights there, John Eng, talking to us there about the market developments this week. John, thanks for your time.
Good to be here.